We're back with the show, and of course, we'll be talking about the markets. Again, right now, MTN Nigeria Communications PLC says this morning in a statement published by the Nigerian Stock Exchange, says a board meeting of the telco giant will take place on Tuesday, the 29th of October. For the board of directors of MTN to consider the company's 9 months financial statements. This is the new board of the MTN post-listing, which was done around May this year. So this is the first major meeting of the board of directors to consider the 9-month result, which will be to the end of September. Then the closed period, according to MTN Nigeria, will be October the 14th. So those who have interest in the shares will not be able to trade from October the 14th, which is today. So that statement is hitting the market. You need to watch the shares of MTN Nigeria as the announcement is made for the board meeting to consider 9 months numbers. If all go well, then we're going to see when the numbers will be out on Market Street. Technically, that will be coming through in the month of November after regulatory approvals. So that's part of the story this morning. Temple Ashaju is from the Nigerian Stock Exchange, our studios there, where Bismarck Rwanda just finished off for us discussing some economic talking points there. Temple, let's bring you into the market. This is from MTN. We'll talk about this. But again, last week was as soft as it can get on the stock market side, but on the NESD side is a totally opposite of about almost 2% upside. Bring us up to speed on this numbers, Temple.
Yes, Bolson. I mean, we saw the markets last week we had just 4 trading sessions out of the 5 days because, of course, we had one public holiday. But basically, I mean, we saw a decline of 220 billion naira in the equity capitalization of the exchange. We saw the all-share index now tumbling to some new lows of some 26,533.78. We also got the year-to-date performance now at an all-year high of 15.6%. That's what we got right now in terms of the year-to-date performance. If you look at the activity level of the market, for last week it was up by some 178%. And of course, the sentiment was really, really bearish. Consistently, we've been seeing that in recent times. If we go by the performance of the sectors, of course, the banking sector was about the only sector that experienced some gains and the buy-ins of investors last week. GT Bank, Access Bank recorded some good gains. But if you look at the consumer goods side of the market, the industrial goods side of things, and of course insurance and oil and gas, all of these other sectors were basically in red for the greater part of last week. Dangote Cement during the week had a bit of a cross-dealing of 100 million units of shares, but that didn't really have any positive impact on the sector eventually. The Dangote Cement specifically was down by more than 4% last week. For the for telecoms sector, they were all flat. MTN and Airtel, there was basically no movement last week. If we look at the energy market, corn oil, Forte Oil, 11 PLC, MRS, all of this had no movement except for O&O, and the only movement which recorded the movement that we saw. That movement was negative by some 0.83%. Of course, this is now a low price stocks in spite of the almost 1 million units of shares that we saw on that side of the market last week. Seplat, Total, Etana PLC, all of these companies remain static. For NASD OTC, as Bolson talked about earlier, we saw that sector of the market, that segment of the market making a comeback last week. Week on week, it was up by more than 1%, 1.94%. It was almost touching 699 699 points last week. That's the NSI, but it's back up to 713.17 points at this point. And of course, for the FMDQ side of the market, talking about the secondary performance of the market now, bonds, starting with bonds, we know that things were quite quiet for the greater part of last week, and of course, we saw on Friday a bit of a positive tilt in the performance. In recent times, we've seen investors now having indicating interest in the July 2034 security. Specifically on Friday, it experienced some kind of a dip of 21 basis points. But if you look at the week-on-week performance, it dipped by some 14 basis points to 14.33%. And the price that you've got on screen, 86 naira 76 kobo, is now the highest that particular paper has recorded in recent time. For Treasury bills, things were really negative on that side of the market because average yield advanced by 8 basis points on Friday specifically and 75 basis points week on week. Higher rates of sell pressure is beginning to set in on the bill side of the market, but at the longer end of the curve, we saw yields basically rising 17 basis points on week. It was actually positive. It dipped by some 53 basis points week on week. Bosun.
Yes, thank you so much, Tempo. The Treasury market looks a little bit small for Friday. Thank you so much, Tempo. We appreciate your coming through. I'm sure what you're watching today will be MTN's board meeting, how the market will react to this news of the board meeting, which will be Tuesday, October the 29th, and the closing date, close period, which is today. October the 14th. Forty Oil also made a similar announcement. The board of directors will be meeting on the same day, Tuesday 29th, but the close period is tomorrow the 15th. I'm sure you want everyone to look at this, to keep an eye on this. I'm sure you're watching this today, isn't it?
Sure we are, Bosun. I will certainly update our viewers much later on the show.
Yes. Thank you so much, Tempo. We had a very full trading week last week, Monday through Friday, and the market took a bit of a beating because of the geopolitical and other headwinds from the global marketplace, from Brexit conversation, the pent-up to the Thursday, Friday trade talks between U.S. and China, which is now not yet concluded. Optimism was high over the weekend. Those optimisms begin to recede. So we saw oil prices go soft on Friday after Wall Street took a bit of that positive reading of the trade talks. Of course, it's been agreed that there will be a suspension or a breather from the United States in terms of putting those tariff hike on Chinese goods. Then we had, over the weekend, not so good economic data in terms of exports from China, cars and other things not looking good for the data that we got over the weekend. So all this put the markets in a bit of a back footing as we start a brand new trading week. So let's get a sense of where emerging and frontier markets are in this entire conundrum of the global space. All these are happening again as we look forward to the first day of the week-long meeting, World Bank IMF meetings in Washington, D.C., which starts formally tomorrow. But, of course, the preparatory meetings are starting today, the 14th. Let's talk to Uchenna Minis. He is the chief market analyst at Eagle Global Markets, and he's also live to us from downtown Lagos. He's live to us from the trading floor of the Nigerian Stock Exchange here in Lagos. Uchenna, good morning. Let's chat to you for a few minutes on the global space and where we are at the moment. Quite a number of issues to talk to, but let's start with the Brexit and the trade talks. Optimism were high mid last week. Then as we're wrapping up the week, it looks like those optimisms begin to fade out. Then it looks like we're starting today not on a very cheery mood, as it were.
Bosun, if we have been following the market consistently, you will get to have understood that Donald Trump has always playing the market through its optics, antics, and also rhetoric. And that's basically what has happened with this last trade talks from last week. What has happened is that Donald Trump has sold to the global market and market participants that they have reached a significant milestone as regards to signing off a truce. Let me paint that picture for you. The Chinese have literally chosen to buy $40 to $50 billion worth of agricultural produce. This is the same amount of goods they've chosen to buy even earlier in the year before the trade war escalated. Nothing has really changed. In short, in the Chinese daily today, the trade war news was not even printed in the front news of their papers. So the fact is, whatever it is that Trump has sold out as the best deal ever, or the mini deal, is really nothing substantiated, really. And there's also the issue of getting to 4 to 5 weeks to put pen on paper, because the agreement has just been in principle. But you need to understand that it is the idea of an event that really drives market prices. We look at it from that holistic perspective, and that is what has happened given the last week. The market participants are realizing that what they've really joined into buying risky assets on the fear of missing out is not really what they think it was, and that's why we're seeing those optimism kind of fade out the beginning of this week.
We're very, very interested. Give us about a minute to chat to Brexit. We'll talk more about the trade war and all that. But again, let's get a bit of the Brexit. How does it all come into this conversation, Uchenna?
So what Brexit from last week just gave us a very surprising, shockingly U-turn as regards to progress. We saw the Irish PM and also Boris Johnson, who is the UK PM, saying that they probably have gotten a deal that is most likely feasible, and the EU, Donald Tusk, EU Commissioner, kind of confirmed on that regards to saying that if that is the case, if the Irish PM and the UK PM have come up with something that can fly with the EU, then EU really would be on board to sign off on that deal. And that sort of just saw the UK economy in terms of the British pound sort of appreciate on that news. So if that is the case, if that should really fly, we should expect Boris Johnson to keep with his words for the October ending as to Brexit, having a deal signed up for Brexit, should I say, leaving the EU. But there's one key factor, and that's the UK Parliament system. The UK Parliament, given what Boris Johnson has done in the past month, we could see that there is already bad blood between Boris Johnson and the UK Parliament system. So whatever it is, the Irish PM and the UK and Boris Johnson have signed off and even EU, there's still the Parliament to deal with. And if that cannot fly, we are back to square zero.
Let's go back to Wall Street very quickly, Uchenna, and that's where the news around the U.S. Fed announcing a $60 billion monthly Treasury bills purchases into 2020 October. This month is the first. We don't have a sunset yet as far as the Jerome Powell's Fed is concerned. So $60 billion every month. The Fed has done about $300 billion already between August and now, the last. So where does it all go?
Yeah.
Folks are asking me on social media, both saying, why is the U.S. Fed buying $60 billion every month, just about the same time that the EU folks are still holding Mario Draghi about the ECB's doing its own quantitative easing?
So, as I said earlier, Bolson, that I think it has come to the point where financial market stakeholders have looked at it and understood that it is all antics and optics and rhetoric that probably would drive the market eventually. The Fed has done everything that concerns quantitative easing without mentioning that they are quantitative easing. And it is quite for us analysts, it's quite worrisome if the Fed cannot come out to say this is what they're exactly doing. In addition to the $60 billion per month, there's also a $7.2 daily billion injection into the repo market to keep things stabilized. But something is really going on underneath, and it is a significant ailment that no one wants to talk about. And if we want to backtrack into other global financial crisis, you will realize that nobody would say that recession is on the way. No one is going to say that. Nobody's going to say that, because that only just paints a bad picture to the Fed themselves or to any central bank, administrators, to say, well, we have failed in all of the jobs that you've really mandated us to do. So nobody is going to tell you that things are going bad. Rather, they are going underneath and doing everything necessary to just continue to pump prices and keep things stable. It should be scary for market participants as to what exactly they are preventing from really coming to surface.
That's the sense that I get every day, every hour, and I keep an eye on the markets and watch all the channels and online. about what is going on. Are we at the threshold of 2009, Uchenna? Because if you look at China, China has sturdily defended the yuan, setting it at a certain level for this trade fight with Washington. Now you find the U.S. Fed, the U.S. Central Bank, jumping into the market, pumping about $7 billion almost on a daily, weekly basis into the market, now announcing even a bigger package on a monthly basis. So when you see the Fed, the U.S. Central Bank, buying treasury bills massively, buying debts, that means, like you said, there's an iceberg under the water, and this could be Titanic. So, if it's a Titanic.
Also, to answer your question.
Yes. Go ahead.
Yeah, to answer your question, you said, are we in the same space as we are in 2009? Also, I can categorically tell you, in my opinion, we are in a worse place. We're in a worse place because central bankers and government administrators have tried their best possible to not allow a natural economic cycle correct itself to get a fresh growth momentum. They have only just continued to inflate asset prices just to keep things beautiful over the surface. There is something maliciously brewing underneath. And I am actually worried for people that are not... Yeah,
in the first place, we are going to see the manifestation of this. It's likely going to be the currencies market. Yes or no?
Yes, it's looking in that regard, and we should just take a look at the US dollar, for example. We should know that the Fed is now actively being very uber dovish, and we shouldn't even take that out. And you can see that the US dollar, despite what everything, all the sink that's been thrown to it, is still appreciating, showing that there is something significantly really happening in the currency market. We're also seeing the emerging market currencies getting hit significantly. We're also seeing other, should I say, antipodean currency pairs like the Australian dollar and the New Zealand dollars getting hit too, trying, and all of the central banks are looking to even go even more dovish as regards to their monetary policy stance. Everybody is being accommodative. Everybody is trying to prevent that possible recessionary risk materializing. And in that way, we should be very, very worrisome in terms of investment, should I say, sentiments.
Everybody should sleep. Everybody should sleep with one eye open
when it comes to investment.
Yes, everyone should sleep with one eye open these days, Uchenna,
exactly, boss.
As we step into, as we walk into 2020. Everyone should keep their eyes open. This is going to be an earnings season for this week. Boss. The big banks are going to be reporting on Wall Street, JP Morgan, Wells Fargo, and the rest of them. We'll see how all of this happen. So when you look at emerging markets and frontier markets, equities market like we have in the Nigerian stock market, you're not surprised what you saw last week, a massive sell down.
I'm not surprised at all. I'm not surprised, and there is that variable that's also linked to our market in terms of how oil prices really do. And as you can see, I think I messaged you and I told you that what it is that right now the only most viable way to pump oil prices is for a bomb to hit some facility somehow. That's the only way, because it has come to the point where the demand shock is real. There is nothing really that is going to push oil prices to that place of significant bullishness. And that's what we were saying, that irrespective of what has happened to all of these oil facilities, we even saw over the weekend Iranian oil tanker, oil prices is still deflationary. And once you have that risk even coming to bite, that is directly linked to our market, and investor sentiment are going to be quite defensive when it comes to going long on our equities. So in that space, it's not really looking so bright if these things continue to materialize going forward.
Yes, it's not. As you speak, as we have this conversation, Uchenna, U.S. oil is down below $54 a barrel, off track 1.86%. The bigger benchmark, the Brent crude, which has a continuous contract for Nigeria, is 1.85% in negative. We're now below 60, 59, 39 continuous contract trading, and gold is making some uptick as well as silver. So that gives us a sense of where we are this morning. Thank you so much, Uchenna. I'm sure you need to get back to the office and continue to see how things are going as you trade the market as well. Thank you so much for coming through from Eagle Global Markets. Uchinamin is the chief market analyst. When we come back after the break, we'll touch base back with the Nigerian market. Then we'll have a cutting razor on the fixed income side.